Media giants have weighed in on the current state of the ad market, with some pointing to stabilization. Others say it's still up and down. Yahoo Finance's Alexander Canal joins us now with more. Allie, which is it? What's going on?
The moral of the story is here, we don't know. But this has been top of mind for investors because this shaky ad market, it has impacted results both in the fourth quarter and really all of 2022. So I listened in on all of these recent earnings calls, and here are some of the top takeaways from these media executives. Number one, most media execs believe we will see the ad market improve in the back half of 2023 and that things will still be up and down in the first half, similar to what we saw in Q4. That being said, a lack of cyclical events such as the World Cup, in addition to the Olympics and U.S. midterm elections, that will all likely be a drag on ad spend this year. So something to keep in mind as we monitor the progress of this recovery. Areas of strength in the market so far include sports, pharma, travel, and most recently autos, as the chip market has seen more improvements there. But overall, the macro still remains uncertain, and none of these executives could really give a firm prediction of the future here. But if we take a look back to 2022, recent data from media investment and intelligence company Magna Global estimated the domestic ad market totaled $318 billion, an increase of 8% compared to 2021, largely due to those cyclical events. For 2023, Magna estimates U.S. ad spend will grow by 3.7%, lower than its September forecast of 4.8%, as the economy is expected to remain pressured early in 2023 before picking up as inflation cools. So, like I said, still to be determined this year. I think in 2024, we're going to have a bit more clarity when it comes to where the ad market stands as those macro conditions improved. But for now, it is encouraging to see at least some optimism from these companies when it comes to the back half of the year.
So given the ad market and where we're at there, what does this mean for companies like Disney, like Netflix, which started offering its ad-based, ad-supported subscriptions?
Yeah, and that was a really interesting time for these companies to debut their ad-supported tiers, right? We had all these macro concerns. However, a lot of these streaming giants were hemorrhaging money, and they needed ways to supplement their revenue outside of those premium subscription tiers. Advertising is one great way to do that. And from the updates that we've been given so far, it seems like it's working out. We haven't had a lot of details, a lot of specifics at this point, considering both Netflix and Disney rolled out their ad-supported tiers at the end of last year, Netflix in November, Disney in December. But at the time of Disney's debut, the company said over 100 advertisers bought inventory for the launch. Similarly, Netflix reveals it nearly sold out of all of its own ad inventory globally for their respective launch. So multiple signs that ad buyers, they're still willing to spend money where consumers are. And right now, that is on streaming platforms. So I'm sure over the next 6 months to a year, we're going to get even more updates on how those ad-supported tiers are doing.
I will confess that I signed up for Netflix to watch that Jonas Hill documentary.
You didn't?
I did not like it.
Wait,
with the ads. With the ads.
With the ads.
Oh, with the ads.
With the ads. I didn't like it. I did not like it because if you try to avoid the ads by going somewhere else on your browser, it stops the ad and then you gotta listen to it.
Okay.
Yeah,
So,
I haven't watched a commercial. I guess I watched the commercials during the Super Bowl. That's the only time I watch commercials. The rest of the time,
even then,
I
I feel distracted during that.
It's worth it without the ads. I think it's worth it.